Can you use ICT methods, which includes the power of 3, and combine it with retail trading to become a more profitable trader? The short answer to that is yes. And in today's video, we're going to look at how to trade this combined strategy. My name is Andre and I trade NASDAQ, gold, and US30 during New York session. For those of you who don't know me, I like looking at the London session just before New York and using that to base my decision on my trade for New York session. So guys, let's quickly look at the two examples that we are going to look at and then go to NASDAQ to look at some real life examples. So we are going to look at the London high and the London low, and the London high and the London low. So there's two main examples to look at. So firstly, the power 3, accumulation, manipulation, and distribution. That is going to be one of our examples. And the other one is just a normal NASDAQ trade that happens with an order block, fair value gap, breaker block, and then going into the direction that we wanted to. So let's quickly look at example 1 and then at example 2. So over here, what happens with example 1 is that NASDAQ moves in the London session like this. It then goes up, breaking the structure over there, coming down into an order block, fair value gap or breaker block, hitting that area there in the New York session. So this is the London high and the London low. In the New York session, going up for that buy. This is where we then will place our stop loss below that low over there. Use our Fibonacci to the upside to indicate TP1, TP2, and TP3. So this is a simple ICT concept of break of structure showing a bullish trend to the upside, coming down to go fetch the orders in the order block, fair value gap, or breaker block zone, and then going up to go and hit TP. That is one of the examples we will look at. Then the other example is the accumulation, manipulation, and then distribution, or in other sense, we will talk about liquidity sweep. That's another word for it. So let's quickly look at that type of example. In this case, when let's say New York session is going to start over here, we will have NAS moving like this before New York session. Going up, liquidity sweeping to the upside, manipulating the markets, and then going back down into the New York session, hitting some type of order block, breaker block, fair value gap, and then moving further to the downside. Obviously, these two examples can be inverted as well for sells and buys, but this is the type of things that we look at. So in this case, some type of liquidity sweep in the London session, just before the New York session, and then going back down to the downside. Usually when we see this type of move, it's quite a strong indication that NASDAQ or gold or US30 is going to go into the opposite direction during New York session. And the same with this one, when it's just ranging in between London, we can find a nice order block over here to get that buy or sell off, depending obviously on what scenario we're looking at. So these are the two examples that we're looking at. We're going to go now to the NASDAQ chart on TradingView so I can show you some live examples. Before we go to that, guys, Blueberry Funded is an awesome prop firm that you need to check out. You can even become an affiliate if you want to and make some extra cash. But the fun thing about Blueberry is that they are broker backed, which makes payouts and those type of things so much more safe and secure. Because if a prop firm is broker backed, there is definitely capital to always pay out their traders, and that's the type of thing that you need to look at for a prop. They also have multiple options for you to choose from: 1-step, 2-step, and rapids. You can even trade stocks with Blueberry Funded to become a prop firm trader with them. And one of my favorite now is that they released a synthetic market as well that you can trade. This means there's no news, you can trade over weekends, and no fundamentals or anything that can hurt your trading, just pure technical, which is perfect. So if you have enough time over weekends, or even if you can only trade over weekends, I really suggest you look for the synthetic one. That's super cool. So guys, check out Blueberry Funded, link in the description. Back to the charts. I'm on the 5-minute with NASDAQ now. So you can do this on the 15 or the 5-minute, even the 1 hour if you really want to. But the London session or the Lux Algo ICT Kills and Toolkit works super well on the 5 and the 15 minutes. So guys, if you want to go to indicators and search for these two indicators, the Lux Algo ICT Kills and Toolkit and the Power of 3 from Flux Charts, I will leave their link in the description as well. This is free. They also have other indicators that you can look at, but this one's completely free. So go check it out. Indicators, put them on your chart and play around with it. Okay, so let's look at example 1. So example 1 that we looked at now previously over here, we're going to look at here. So you can see when London session ended and New York session opened over here. Okay, we can see that it's still ranging within the London session. It almost went up and closed and, did a liquidity sweep to the upside for the sell, but it didn't. This is still within the London session. So now we are looking for our reason for a buy. So we have the break of structure to the upside. We have these little steps that are broken to the upside, indicating a buy. So now we need to look for an order block / fair value gap. Obviously there you can easily see the order block over there, and you can see this massive fair value gap, which is all these green candles together counts as a fair value gap. Especially if you go to the higher time frames, you will see that these candles together is a fair value gap. So now you just put your Fibonacci tool from the bottom to the top like that. Let me just zoom in for those people that are on smaller screens. You can see that it even went down into this, I like to call it as well, the kill zone, the 61 to 78 zone. Anything close to the 61, 71 and the 78 on the fib is an important point of interest for you to take a trade in. Just giving that extra confirmation. Now, Henry, you said something about retail trading. Yes, guys, retail trading, in my opinion, on its own isn't very profitable. But when you combine it with this, you can just get that extra confirmation with your trade. In this case, you can use a simple trend line. I'm not the biggest fan of trend lines in terms of accuracy, but just the fact that when it definitely breaks a trend line to the upside, you can then use that as an extra confirmation. Trend lines are very tricky to draw sometimes, and you get confused by wicks and candles and all this, or bodies and things like that. But when you just draw a general one like this and it breaks definitely to the upside, coming down into this area again, not stressing too much about the retest on the trend line, because as you can see, you would have stressed there because it went through the trend line, whatever. That's the type of things that I don't like about retail trading, but you can definitely use this as an extra confirmation. So now you have the trend line break, you have the order block, fair value gap, the fib, the fact that it didn't break out to do a liquidity sweep. Perfect buy opportunity for you guys over here. So let's go to the opposite one. So in this case, we have a sell, but you can also, when you flip it around, when it liquidity sweeps to the bottom, you can then have the opposite like it did over here. So New York session is over here. Let's just mark that out there. And you can see well before New York session, we had the break to the downside, which was this liquidity sweep or the manipulation that happened. Usually when traders see this, they're like, oh, it's going to sell even more. We have to place sells. It's a big, no. When you look closer into it, when you look closer into this, we will see that we can easily spot the buy. Number one, we have a break of structure over here. We have a break of structure here. That high was broken to the upside, indicating a buy. And obviously, breaker blocks. If you guys want to know more about breaker blocks, go check it out on YouTube. There is some explanation on how to see a breaker block. But this red candle over here is a breaker block. And there you have your entry for your buy over here during New York session. Even if you want to, you can say that this is a fair value gap as well in that area there. So guys, this is how you spot your trades to the opposite side. Now, in this case, you will then take your Fibonacci tool like this, to the upside. you will see NASDAQ came close to the 61 zone. Remember, nothing in trading is always 100% perfect. People always ask me like, yes, but it missed the 61 by like 3 pips. It's still a 61% retest. In my opinion, it went to the top of that red candle, missed it by like 2 or 3 pips, but that is still a valid entry trade for you to take. If you are someone to place buy or sell limits, you need to obviously spam that area with a buy or sell limit in that zone over there. Not spam, not like a risky spam. That's not what I mean, but you guys know what I'm trying to say. So now you can see this downward manipulation happening here and it breaking up to the upside for that buy. Andre, how would I trade this as a retail trader? Okay, as a retail trader, we want to definitely use support and resistances as well. You can see that there was a massive support over here that was definitely manipulated to the downside, coming and breaking back up, and this, there we go. So that's a support, resistance, and turned into a support again. You can see those wicks coming down. Once again, not an exact science, but definitely an extra way to use for your confirmations in taking this buy trade. So that's another way you can use retail trading to confirm your trades. Guys, there's this awesome tool now that I need to show you. It's called the Power of 3 from Flux Charts. This is now another extra confirmation that you can use during New York sessions to take your trade. And you can see that it even said buy to you just before New York open, which is a strong indication of a buy. It saw this accumulation over here, then the manipulation to the downside, and then a buy. So I'll never really take the trade on its own with this tool, but I want to actually use it during my New York sessions to confirm my trade. Depends on what type of stop loss you guys want to use, but just because it was just before New York, I won't technically take this trade at 1.5 hours before New York, but that buy was a strong indication for me as well to take the buy trade. The same with this one, you had the buy telling you there was going to be a buy or there is a buy, and you even see it with the strategy that there is a buy. So now you have that extra confirmation. Accumulation, manipulation to the downside, and then the buy. And then you can use your order blocks, fair value gaps, and those type of things to actually perfectly enter your trade. So guys, go check out these 2 indicators, add it to your chart. It is super important that you have to, well, not super important to add them, but it makes your life so much easier. So guys, go check out Blueberry Funded, check out Flux Charts, and guys, trade safe, always use stop losses, and make sure that your risk to reward ratios are correct and that you don't over trade. I'll see you guys in the next video.